Ladies and gentlemen, this is going to be a little bit of a different video as I'm not going to edit this. I just want to give you guys my raw thoughts, but there was breaking news. SoFi is going to be diluting shareholders again, another $1.5 billion, about increasing the total share count by a little over 4% once again. And the stock is down 5.5% in the after hours. The immediate thought that everyone should think about is, wow, this timing is absolutely the worst. This is one day before possible S&P 500 inclusion. Now, I know what you guys are thinking. Oh, well, this guarantees that they're not in the S&P. No, it doesn't. The actual companies have zero idea if they're going to be entered or not. The S&P 500, Standard & Poor's, does not call them. It's not up to their decision. They don't have to accept. It has nothing to do with them. So Anthony Noto truly does not know if he's been selected for the S&P 500. And if they were, and they did this dilution, let's say next week, after we pumped up 20% on that news, then you'd have to dilute a lot less shares in order to get the same amount of money. Or if you're diluting by the amount of shares, you would have got a lot more money, 20% more money. So the timing's very weird for me. Okay. But we have to think about what happened last time. There was an initial drop on the stock whenever we found out that we were going to get dilution. And then people started to do the math. If you guys remember, I did the math on a spreadsheet before, trying to add up what we knew the price would be of the dilution, the amount of shares, the additional 15%, which, by the way, is happening on this one as well. We did dilute by 1.5 billion, but it's going to be up to a maximum of 15%. Every time I've seen this done with a company like SoFi, that 15% is always taken. Okay, so it's going to be roughly, $1.7+ billion. The dilution is going to be 4 to 5% this time. Don't worry about any of these numbers. This is the last time that they diluted, which was in the Q2 to Q3 time. Anyway, last time this happened, people thought, okay, we're expecting 31 cents. We're going to get 29 cents instead because of the dilution. But no, whenever they dilute, they're raising cash. So with that new amount of cash, they're going to make a heck of a lot more money. And then I said, you know what? We're probably going to see 38 cents of EPS. And now that's exactly where Wall Street consensus is. Anthony Noto said it before. If they're going to do dilution, it's only because it's accretive to their business. They think that they can make more money by doing this. But we have to think about the reasons why companies actually dilute. So this is also very important. SoFi comes from a position of strength here. They're the most profitable they've ever been. They're re-accelerating growth, and then they dilute. They absolutely didn't need to do this, but they think that the money that they are going to raise now, which likely is for an acquisition because they definitely don't need the additional capital. They haven't used the last additional capital from before. It's still just been sitting in as cash. So to me, if you were to ask me, it's 100% going to be for an acquisition. But if we take a look at the risk-based capital ratios, which I just modeled out here, you can see how much they've just increased their risk-based capital ratio from 14.4%, which is still acceptable, okay? Anywhere between 14 to 16% is very normal. Then it jumped up to 20%, which is really, really high. And that's why a bunch of investors have been saying, hey, they have so much capital now, they're not going to be raising anything more because they have essentially for every dollar that they raise, they can give out around $10 worth of loans, okay? So you raise $1 billion, you almost give out $10 billion worth of loans. There's so much growth to go there, right? And that's on top of how much they're potentially going to grow their business and make additional money from financial services, tech platform, the rest of the company. But then with this, raise alone, not changing the amount that they're actually growing, all I added was 1.5 billion, not even the additional 15%. This brings the risk-based capital ratio up to 24.67%. which likely after the quarter and everything is above 25%. That's actually way too high. That's extremely conservative, okay? And they need to start ramping up growth. But there's just not enough customers to give out that many billions of dollars of loans to over the next few quarters. So what they're going to do essentially, or what I think they're going to do, is look for an acquisition. I think they have something planned. Now, the timing of this is all very, very suspect too, because we need to think about guidance for 2026. Forget, 37 cents versus 38 cents or 40 cents for this year. 2026, Chris Lapointe, the CFO, literally came out the other day on a fireside chat and said, hey, we're reiterating 2026 guidance, okay? We think it's going to come out on the lower end of that, but that's because growth is going to skyrocket. And then today they raise additional capital to speed up growth even more. I think that they're going to try to say that and then, put up much, much higher numbers in very SoFi fashion, right? They beat and raise every single quarter. There's no way that this dilution is going to change that. Another thing, because people are going to be freaking out. How could they? They're diluting retail shareholders. No, guys, we have to think about it this way, okay? One, they're diluting retail shareholders. They're diluting institutional shareholders. And most importantly, they're diluting Anthony Noto. This is Anthony Noto's decision, and he has more on the line than any of us. And I'm not just talking about the dollar amounts. We have to think about his performance-based stock units, okay? If he thought that this would negatively affect the stock, and I don't mean on the short term, I mean like after a couple weeks, if he thought that this was going to negatively impact the stock or impact their fundamentals, he would never have done that, because then he's not getting paid on his $35 performance-based stock units or the 45s, okay? So if you're thinking that stock price needs to get higher, the worst way to do that is to add additional shares. That's diluting. That actually brings down stock prices. So extremely weird, right? Last thing I'll say, unless I think of something else, but those are the things that I sort of had jotted down, was the lies. Okay. This is the second quarter in the row where Chris Lapointe, Anthony Noto, the rest of the SoFi team has come to, their audience and said, hey, or they've been asked, hey, are you going to raise again? Do you think that you'll need additional capital? And they said, no. We are fully capitalized. We have all the money that we could possibly need. And then they raised. And then they said, no, we're not going to do it again. Like we're stuffed now. I mean, we're full. And then they come back for dessert again. They dilute again. So there's definite lies and not deception, but this is not a good look for management on what you're telling retail investors versus what you're actually doing. Now, do I think that my money is placed very well at SoFi? Of course. Am I going to sell any shares? Absolutely not. And if the sell-off gets any worse, which it doesn't seem like it is, it actually seems like it's sort of flattened out already. But if it does, like if we end up going down like 10% on this news or something tomorrow morning, I'm absolutely going to buy this dip. Okay. While I don't like the commentary from Anthony Noto, I trust in management and they have never done my dollar wrong. Okay. So if they see an opportunity to buy a company, to invest in more home loans or student loans, maybe they're ramping up for a big student loan bump, right? Who knows? If that's what they're doing, I have full belief in their capabilities. So I think that this is fine, but very, very surprising. And I can't wait to see what it means for guidance going forward. But like, what is growth going to be like next quarter? 45 or sorry, for next year, like 45%. Like, I'm just thinking, what does a company need with this much money? You've diluted like 11% shares for like an extremely profitable business. That's not normal. But we also have to remember where they're diluting from. This is from a place of strength, okay? And for some people to get also more confused, this is not dilution that goes into their pocket or anything like this. This is the company's dilution. Anthony Noto gets hit as hard as you, if not harder, because of his performance-based stock units. So his incentives, the team's incentives are aligned with ours. We have to sort of trust them here. Or sell your shares. I mean, it's completely up to you. Thank you all so much for watching. If you guys want more of these types of videos and you guys like just the quick updates, let me know in the comments down below. But bye for now.